Hi, welcome to the Market Alert for Wednesday, the 16th of September 2015. Slightly different today. Had a question about yesterday's evening session, and obviously I've already warned about how quiet this can become at the moment because they're waiting for Yellen's decision on whether she's going to increase interest rates or not. So let me just talk you through why we had so many contrary signals. The first thing we've got to do is to look back at the earlier part of the day. If you come down to the bottom left here, you can see that we had the market. In fact, let me just show you this in the live chart. You can see there we've got the market selling off, and then we've got this test on a very high volume. Now, this didn't appear as a test in the live session. It showed up just as an ordinary grey bar, which you'll see in just a moment. Volume very high though. And the only reason we didn't get a PTI signal on this is because this price bar didn't actually close on or above this psychological line. That's what the PTIs are, psychological trading levels. And it's a shame because this move was 80 points. So the market then gave this one a bit later on, of which the market then eventually moved its way up, and then you start to see a couple of losing trades in that quiet period that we don't normally trade. And as I warned again in Monday, that it could be like that this week whilst the market waits for Yellen. You will also note as well, as this market moved higher yesterday, there is no buying. This is the market being marked up. There are no green bars after this green bar, and even on this big 50-point bar here, there is no professional buying. This is a dead cat bounce. This market is being rigged, it's manipulated, and it's being moved to the upside by the banksters and also, as Gerald Celente likes to call them, the white shoe boys, which is obviously referring to the Wall Street film from the 1980s. And he's right, absolutely right. This market is manipulated at the moment, whether it's the plunge protection team or whatever, but they're just moving the market back up, obviously in anticipation that Yellen may just increase interest rates. But that aside, we start to see some a couple of losing trades inside of the quiet time. This is a time not to trade, as I've warned again, and I keep reiterating this during this week because of this interest rate decision and news to be announced on Thursday. And then, of course, we get one there that moves the market up. Now, we've moved 200 points up to this level and going into the evening. We've also moved on no volume. So if we just switch back now and watch this unfold, as I always record these in real time, so if there's an issue, I can actually play it back and take you through each bar. So here we see the market giving a PTI, and I'm going to go fast forward through this obviously. The next one is actually filled, and you'll see the market come back and take this one out. There's a clue there, again, no volume, no driving through. We've also got this selling here as well, that the market's got a problem. We're going into the afternoon session, interest rate decision in the background. So this is why you will see the market being held on the highs and then pull back. We've got another potential buy there. The market fills it. And again, red, we've got the potential selling there. We've also got a contrarian signal now for the short side. And the market comes down and fills that, takes out the stop on the other one. So we've had a 16 point, a minus 26 now. And you'll see this turn around as well, and the market moving back, and that takes this one out for another 19 points. That's a minus 61 at this stage, and then prices moving sideways and then taking this one out as well, and then prices just going sideways to higher there, again keeping the market on the highs, but some indecision in this market during the early part of the evening session there. And as we've seen for the last few weeks since we had the 1,000-point drop, they always like to try and get the market on the highs before the close as well. So that's what you're seeing there, and again struggling a bit there, and then the market finding support as we head towards the close of the session there. So the market, again, as I said in Monday, the evening session is going to be a difficult session this week, because the evening session is also the time that the announcement is going to come out by the Fed chair as well, if you're located in the UK. Also, the plunge protection team are going to be out in force and moving the markets and holding the markets as well. They do this all the time. And just to show you that it's not a conspiracy theory, that these members do exist in the plunge protection team, you can see the working group consists of the Secretary of the Treasury, the Board of Governors for the Federal Reserve System, Securities and Exchange Commission, and Commodity Futures Trading Commission as well, or his or her designee. And this has been going on now since, it says there, October 87, when the market went into free fall. There was nothing to protect the markets, so this plunge protection team was put in place by Reagan, who was the then president of the US, and it's been there ever since. And when you get this type of activity here, where you can see the market being whipped around a bit and then eventually being forced back up, that's what it is. And that is at the moment, because obviously they don't want the market to go down. It's a big asset bubble. It's not the biggest asset bubble. The biggest one is the bond market, and of course all hell will break loose if Yellen does increase interest rates on Thursday with that one, that's for sure. So this is why you're seeing this sort of market being moved up. It isn't any professional buying, it's the PPT moving the markets to the upside just in case. And I would suspect that it's looking that Yellen is going to increase rates as the market's being moved to the upside to take account of moving lower, or to allow some of the professionals to get out and clear the decks before interest rates do go up. It's very ominous, this sort of price activity. And like I say, what's even more glaringly obvious is the fact that this market's moving up on no volume. And if you have a look at the daily chart, which we'll do, and just get rid of that, you can see yesterday, I mean, the volume is absolutely non-existent. So you've got this up day yesterday, and the market, no volume, simple as that. It's gone back to the highs of where the market recovered. This is the PPT coming in to the markets as well, which you can see here. This was a buying bonanza, that, you know, these talking heads that you get in the mainstream, CNBC, Bloomberg, they're wheeled out for a reason. Let me tell you, they're wheeled out to get the non-educated investor into the market thinking everything's fine. It's just a blip. It's not a blip, because we can see already that the backdrop, and the video I recorded a couple of weeks ago, which you've not seen, then take a look, about why these markets are about to see a major move to the downside. And again, this confirms it. This is the market going up on absolutely nothing, and a case of just waiting for events to unfold, really. Let's have a look at any economic news today at 3 p.m. 3:30, only crude oil inventories, they're out then. So nothing really there. And let's just have a look on the overnight market as well, because let's see if things have cheered up a bit. China was down again when I looked earlier. Let's just see what sort of volatility we've got. It's very, very quiet again. So the pre-market session like yesterday could be fairly quiet. And again, I expect this to pick up a bit after Thursday. But up till Thursday, the market is very difficult to call as far as volatility levels are concerned, because of this waiting for Yellen. And a quick look at China. Let's see what's going on there. We're actually below the 3,000, down 0.36 on yesterday. The market down 4%, 5% at one point yesterday. Chinese have implemented a new rule that should the market drop to 6%, then they are allowed now to close the market. So there won't be any more 8% down days that we saw a few weeks ago. And finally, let's have just have a quick look at the implied volatility. So we've got 1972, so a fair drop from yesterday, below the 20% at the moment. So we've come off this big spike now. This has breathed enough now for this to move back to the upside should Yellen increase rates and we see a major move to the downside in the stock market. So yeah, interesting picture there developing in the implied volatility as well. Again, once you reach these extremes, the market has to breathe before it can then move again, and that's why you're seeing the stock market bounce on low volume, dead cats bounce but they don't run away, and now you're seeing the froth having come out of the options volatility and now is free to move back to the upside as well. Right, that's it for this morning. Bit of a long one, but like I say, a question was asked and I thought I would just tell you the reasons why and behind it, and like I say, apologies if it's a bit long, but it's worth noting what's going on in the background at the moment. Right, that's it from me. See you in tomorrow's edition. Have a good day. As ever, thank you for your support and also for watching. See you in the next one.